for the trading morning. For those that are just joining us, we're coming into the cash open here in New York. Right now it's 9:21 a.m. on August 7th. Everything we do is for educational purposes only. Nothing is direct trading or investment advice. This is a trade along experience. This is coaching. We have guests coming in. Welcome guests. We have current subscribers coming in. Welcome current subscribers. We got a great deal for individuals out there today. I'm going to post the opportunity to join us on a daily basis. For those that don't know, our home base is in Zoom. Take a moment, depending on where you're coming from, and add us as a friend. Take a moment now to do that. Add us as a friend. If you're coming in Discord, great. If you like what we're doing, tell your friends. Also tell Dolby Time. Dolby Time is a great friend of this e-mini trade along. Dolby Time is in Discord. He's one of the leaders. So let him know that you like what we're doing here. For those that want to join us in Zoom directly, you have the opportunity to do that. If you're interested in trading Top Steps money, I can post a link, but ask. I can post it to you. I'm going to post in the opportunity to sign up for the service. Post it in Zoom. I'm going to post it out to everybody. When Saul pops in, he'll take over the microphone. Don is here in the background. Hey, Don, how are you? If you can hear me. Hey, Ash, how are you? Dudley, Elizabeth, KG, Philip, Webster. Yes. How are you? Yes. Post the levels in Discord for you when they come in. Look to plot these levels. Pay attention to them. Going to be a pivot and other levels on top and bottom of the pivot. Maybe 5 on the top, 5 on the bottom, maybe 6 depending on the trading day and how the charts are setting up for the day. Hey, Wetness, how are you? Make sure you take a moment and add us as a friend. Waleed, add us as a friend. Wetness, add us as a friend. You know, it'd be nice if I did have my ears on, right? How's that, Don?
Can you hear me now?
I can hear you.
Oh, okay. Good.
That was my fault. I had the Zoom button clicked to mute. I was talking to Don, and Don was talking to me, and I was on mute. So I couldn't hear him. Actually, my ears were on mute. My voice, I think, was still coming through.
Yeah.
But anyway, welcome, Don.
Good morning.
Today?
I'm great.
Your voice went way in the background.
How's that?
Still way in the background.
Still way in the background.
When you first came on, you were very strong. I guess it could be me again, but I don't know.
Any better?
I hear Don and I can't hear him.
Testing.
Yes, Zoom. Yes. yes. Our home base is Zoom. Hey, Rob, that's great. You're going to love this.
You should be able to hear me.
I can hear you now.
Okay.
But you went went into the background really low. You're still a little low, but that. How is Don coming through? Let give him a vote. Give us a sound check there, Don.
Testing 1, 2, 3.
Or Don. It's okay, they're saying. Okay. That's good. You're okay. Remember the other day, I think you did something with your mic and it was right in front of your...
Yeah, it's normally where it's at.
Yeah, no, it's good. I think it's that's perfect. I think I'd have another jolt of caffeine.
That's it. It's Monday.
Yeah, it is a Monday. Had all sorts of trouble getting on. It's funny.
You still hadn't been able to get into Saul's computer to crank up the charts?
No. But I haven't really tried. I have to do with him.
There it is. Our fearless leader has shown up.
Yeah, so I think I have everybody muted on the Discord side right now. Just let me know if you're still having trouble with feedback. Let me know if it's okay now. Might be able to do something else too. Still not muted for you? Let me see if I can do it again. Yeah, I've got it muted here. That'd be great. Look at that. Oh, that's excellent. Good. Because I see them muted here, just so you know. You see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. Take a close look at those charts and see how clean they are. You'll start to understand based on this trade along that when Saul lays out this morning's levels, those become the areas of interest, and he'll explain that to you. And it's important for you to know that that's what he's looking at for this morning's trade, and that he adjusts and tweaks based on the action of price. So put up an S&P 500 E-mini chart on your end. When he gives out the levels, they'll be repeated in the chat area, and then I'll repeat them in the Discord.
All right, good morning, everybody. Can you hear me all right? Let's give you our levels for this morning. Our pivot this morning is 45.16, 45.16. Support down below at 10, 45 even, 44.93, 83.74. Resistance on the upside at 26, 34, 40, 48, 59. Pivot 16, 45, 16. Resistance at 26, 34, 40, 48, and 59. Support below at 10, 45 even, 44.93, 83, and 74. All right, welcome to some of the new folks that are here. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur once the market paints some bars. Combination of both of those gives us our opportunities to scalp the market, and right now we're looking for about 2 or 3 points on our rotations and our opportunities to scalp. And we're looking probably 4 to 5 trades during the course of the morning hours. We focus more on the morning hours to give us our opportunities to trade. We feel that the dynamics in the morning fit our methodology and gives us good bang for our money during those times. So that's what we're looking at here on an everyday basis. So welcome, and if you have any questions, feel free to ask in the chat. as the market upticks here a little bit. We're looking at the 26 area right in here. Quickly coming up to the 26 area. Again, it's an area, so we're scaling around our levels here. So we're up right here, about in the 26 area really quickly, and a nice little quick rotation there off of this first level of resistance. That was very quick. Thank you. Morning. Sometimes, like I said, there's definitely opportunities in the morning. It all depends on your risk tolerance and what you like to trade. Some people like to trade first the volatility. Some people don't. So obviously, there's a risk reward situation here, just like in this case right in here. Came right up to our 26 area and rotated off, and had a nice quick scalp right up against it once the market opened up. Again, we're looking to take advantage of ebbs and flows of the market, and we scale in around a level. Obviously, we didn't get up to 26. We got up to 25 and a half here. And again, if you've been with us here for a while, you know I scale in around the 26 because we're not going to be perfect. So if you did jump in there really quick, obviously is right on the opening, and there's obviously a little bit more risk involved trading the opening. But again, if you again, it's all a matter of risk reward and what you're comfortable doing. So if you did jump in, nice little quick opportunity here off of the opening. Again, if anybody has any questions, feel free to ask in the chat. We do scale around those levels. That's why I said that, and then, like I said, if you've been with us here for a while, you know how we scale in around them. And if you have any questions about that, then feel free to ask in the chat. We don't mind questions. So nice little quick hop right up here, right up to our little resistance area. And a quick little rotation here right up against it, and then we'll see what we want to do. Again, we average about 4 to 5 trades a day, and we focus more on the morning hours to give us those opportunities. We do feel that the dynamics in the morning will work better for us. There are more traders trading. There's definitely more volatility in the morning hours, and then things do slow down a little bit after that. All right, so nice little quick rotation there against our. Obviously, if you have the 26 and you didn't get filled, got to be mindful of that. And be a little bit careful there if you're going to take the 26 right now, because obviously it's a lot. I mean, we did have a nice rotation against that area, and so now it becomes a lot more riskier if you're going to just take the 26 straight up. All right, we'll continue to uptick here a bit if you're going to. Again, it's a lot riskier right now to take the 26. Maybe if you're going to do anything, you trade it smaller, or maybe you trade the upper end of that range. But again, you have to be a little bit careful there. Yeah, we'll get the levels up here in the chat. Obviously, I'll repeat the levels again. Our pivot this morning was 45.16, 45.16. First level of resistance we have is up here at 26. Above that, 34, 40, 48, 59. Support below at 10, 45 even, 44.93, 83, and 74. We'll get the levels up there in the chat in a minute. All right. Again, so now we're coming up here against the 26. Remember, again, it was kind of already, the level was already traded off of. So be a little bit more careful now if you're going to trade it. And we made a little quick scalping opportunity there. So now we're going to look at the next level above there at 34.
Quite frame.
And if you look at the chart, you'll see the levels there that we gave out this morning. Links there down. Next level above, we're looking at the 34. Again, if you're going to take any part of this 26 right now, you're doing the upper level, upper end of the range there. If you're doing it at all, obviously it worked the first rotation to it. And now I'd be looking at the 34 next. This week we've got CPI and PPI coming out here on Thursday and Friday. So something obviously the market will be kind of focused in on in regards to, the Fed's reaction to inflation, and if they're going to continue, pause, or do whatever they have to do, and how the market's going to react to it. So now inflation has been a key number that the market's been focusing on, and we'll see those will be released on Thursday and Friday. The CPI is consumer inflation, and the PPI is wholesale. We shall see what that brings on Thursday and Friday. This morning, let's see, this is the Monday after unemployment, usually quiet in regards to numbers and everything like that, and it's such is the case. There's really no numbers coming out this morning. We do have coming out this week, though, so in addition to CPI, and we do have lots of auctions in bond market, which again, the bond market has been kind of jolted a little bit last week by the talk of what Fitch is downgrading of debt. So we'll see how that plays out. No, we we figure out those levels are figured out by the work that we do in our mentoring class. We show you how to find them and why we would be looking for those areas. It's definitely out of the technical analysis work that we do more than any Fibonacci retracements or anything like that. And if they do match up with Fibonacci retracements, that gives you more reason or more confidence in using the levels. So nothing. So that's just an additional opportunity there. If they do match up with any of the Fibonacci's or whatever other tools you use. We do use Fibonacci's, but more on longer term charts than we do on shorter term stuff. All right, nice rotation there. Again, if I did mention if you're going to if you're going to take the 26 level at all, you're going to take it on the upper end. It got up to 27.75 there. The upper end would have been the 27 area. You had to trade it smaller, but there was some good. But if you're going to take it at all, that was where you would have jumped in. And if you did, you're getting a nice little rotation here off of that level. A little support here would be, well, they're around the pivot. Otherwise, you're looking more at the 1110 area, which is the next level down below that we have. Again, depending on your risk tolerance and what you are trying to do. All right, so nice little quick rotation there. We did have the 26 area again. It got triggered right away when it went up to 5.5. Then again up here when it retested the upper end of that range up here at 27. And now we're coming back down here, a little support down at the pivots if you're going to be scalping it. Otherwise, looking at the 1110 area down below, which is our first level of support that we have. All right, we're quickly coming down here to the pivot area. Again, if you're a little aggressive, maybe you're looking for an area there where you wanted to jump in and get a little bit long for a little bit of a scalp. Otherwise, you're looking at the 10-11 area if you're more risk averse. Again, everybody trades a little bit differently here, so there's not one right way or a wrong way of doing it. You have to understand the risk, and that's what we try to do in our mentoring class. We explain the risk involved here in some of these trades, and then how you should trade them according to your risk tolerance. All right, market continues to downtick here a little bit. Again, keep your stops in place. There's no reason to love anything. If you're trying to stay short from above, you're getting a nice little rotation. Again, we're looking at the 11, 10, 11 area. We did go right down to our blue band there and rotate it off of that. Again, there's many different price action plays here, and obviously there are some we talk about, some we don't. So that some of the things that we talk about are part of our mentoring course. And the blue band there is definitely a trade that we talked about in addition to the blue band in our hourly there. If you did look on that, they kind of matched up very nicely. Got right down to that area there and pop back up here. Again, you're looking for opportunities to scalp the market. And also your scale depends on the area that we're focused in on and trying to trade against. Again, if anybody has any questions, feel free to ask. All right, let's see here as we continue to kind of just hang around our pivot now. The latest non-farm payrolls figure on Friday showed that the greatest hiring boom in the aftermath of the pandemic continues to moderate. The Labor Department reported 187,000 jobs were added in July, fewer than 200 expected and lower than the 312 average seen in the first quarter. Revised down its most recent May and June estimates by a combined 49,000. That could help turn the tide in favor of employers once again and tip the scales towards setups like hybrid work and even more time in the office. All right. Now we have no numbers coming out this weekend, like I said earlier. Again, if anybody has any questions, feel free to ask in the chat. All right, we did have a nice little quick rotation there against our blue band area and kind of our pivot here. We had to scale in around both of those to kind of take advantage of both of those. All right, we're just kind of hanging here around the pivot area. They did bounce off of the blue band pivot area, and now we're just kind of hanging here. We'll see where it wants to go next. The 1011 area is our next support level. Again, if anybody has any questions, feel free to ask in the chat. Market kind of hanging right here around the pivot area, trying to see where it wants to go next. Next support level on the downside wave is 10. All right, kind of just bouncing here off of this little, off of our pivot blue band area and then pushing back up. Obviously, the 27, 26 area is not a level that we're going to be uh, retesting. It kind of worked twice already, so it kind of went to the. We're going to be looking above at 34 as our next good level of resistance. Again, if anybody has any questions, feel free to ask in the chat. Patience is very important here as we rotated off of our level, came back to the support level that we have, support area, I should say, and then kind of hung there for a bit, and then finally rotated back up here. Well, that's a good question. Are we waiting for the price to come to the next level before placing a trade? Well, we are. First of all, my orders are already in place, and we are waiting for those opportunities at this time because we already traded our first level of resistance, and so we're not going to be retesting at 26 at my end. I'm looking at the 34 above downside support. I'm looking around 10, and kind of in the middle here. In the middle here, we just have to be a little bit patient. The market is kind of trying to figure out where it wants to go next. It could go either way. We could rally back up, or we could rotate back down. And I would be guessing here as to which way the market's going. So my deal is that I'm just going to be waiting to see if I get triggered at all. Yeah, already. Yeah, I took the took the profits that we had and the market gave us off of that rotation against the 26. So I'm flat. Again, we're scalping the market. We're looking 2 or 3 points minimally. Definitely could have gotten a little bit more than that on that first rotation at the 25 and a half area when I got up there. And now we're just kind of bouncing around here, and I like to call this a no trade zone. And you really could, because you just don't know which way the market's going to go from here. The one thing we've learned here, more than anything else, is to be a little bit patient. And that's why we also tell you that we're looking for about 4 to 5 trades a day. And we average about 4 to 5 trades a day. So there's definitely some days where we trade more than that, other days where we trade less than that, obviously. So, but they are, they are there for us, and we have to be patient. I mean, that's the most important thing, is to just be patient and wait for the market to trigger an opportunity for us to trade. That's a good question. You can see that if I've already placed my orders at the levels, when do I have price action opportunities? When the price action opportunities present themselves. So I'm looking at the charts, and I'm watching the development of the price, the bars, and then if something occurs, if there's a momentum trade or anything like that, then the market is going to give me that indication. Then I will subsequent to that place an orders. But I'm waiting for the market to give me that opportunity based on the movement of price. So when that occurs, then I'm going to make those entry points at that point. Right now, I mean, a little bit of a sale there below the 13, looking down to 10, but that's only if you're very aggressive. If you're looking for a price action trade. Otherwise, kind of not really much going on after that. It's been pretty range bound here. All right, coming down here to these lows again. If you're very aggressive, maybe you're looking for a little short there against the 13, looking down to 10. Otherwise, though, that's only, again, everybody has different risk tolerances. Some people like momentum trades, some people don't. We kind of let the market kind of develop those momentum trades for us. And sometimes they work out, sometimes they don't. Again, a little bit of a sale here below the 13, looking for 10. If you are a little aggressive. All right, you can see here we got a little bit of a sale here against 13, popping back down here a bit, looking to cover, looking at the 10, 11 area as our next support. Anthony, did I keep any of my shorts there against the 26 short that I had? I took 6 points out of it, and that was it. So out of my runner, as you put it. All right, coming down here again, a little bit of a short there against the 13. If you were a little aggressive, looking for the 10 area. All right, we're getting that right now. Be covering some of your 13s here. Look, maybe if you're getting long here against the 10, that's our next level of support. But if you got short there against the 13, again, we had a little momentum trade going. That's what we're looking to cover. And now if we're getting long here against the 10, see how that works out. It's the 10 area, remember. You're just leaving that trade in there, trying to get a little bit of rotation here against the support level here at 10. Again, there was a price action trade. We said this little sale below 13 area. And now we're getting a little bit of a pop here against the 10 area, here to 10.5. And a nice little rotation here against the 10 area that we had. We said we had the support of 11.10. Got right down to 10.5 there and rotated very nicely off of it. So if you just played the levels and did not push trade the sell through, the little momentum trade there at 13. Somebody asked about price action trade. That was the price action trade that the market set ourselves up for. A little sale there below 13, looking for a push down to that 10-11 area, which we got right down to 10.5. If you got long there against that area because it was our first level of support, you're getting a nice rotation here off of it back all the way up here. Up here to 15. Be nice if I can get. Oh, the 15 is our blue band area, so we have a nice place to take some profits and see if we can rotate a little bit higher. Was I surprised on the sell-off on Friday? Uh, honestly, it was they sold it off in the last uh, hour or so. So again, those trades that happen in the last couple hours are very tough to trade. First of all, you don't know why they're trading it. There's a whole bunch. The bond market closes about 2, then it's open for last hour. Tough to trade that last hour. First of all, was I surprised by it? Nothing surprises me in these markets anymore. So, I, I you know, the the markets kind of like to do their own thing, and that's what they do. The market did go down to 93. You're right. That was the level that we had on Friday, if I'm not mistaken. So it rotate right down there. Yeah. So I don't nothing really much surprises me anymore with these markets. And then we're kind of rotated back here halfway from that Friday range. You can see here Friday's range will appear at 45.60 down to that 93 area. So what is that, about 70 points? So if we get back up here about 35 to the 25, well, we got right back up here to mid-range from the whole move on Friday. So yeah, I mean, now I wish I could tell you it's surprising. Nothing surprises me in these markets. Did I expect it? No, I didn't expect it. But but I don't trade in the afternoon. So I mean, you could put a couple reasons for it. It's still kind of a little bit nervous about the downgrade in the U.S. Debt market, uh, and so that obviously is a new thing that the market has to deal with. It hasn't had to deal with before. And the unemployment number was bad, which I guess is good, right? These days, bad is good. And you did have a nice rally. I mean, we did rally nicely. Yeah, Friday. We were kind of busy in the morning, if I'm not mistaken. So we had some good opportunities. We definitely traded more than 4 or 5 different opportunities there. And again, then the afternoon comes around and it's a totally different animal in the afternoon. Totally different. Friday's level, we had actually we had it. I gave it out the day before because yesterday, Friday, I got down to 45.01 as my low. But if you had Thursday's number below '01 was 44.93.
Yes. Yeah, yeah.
Well, the bond market again. What do I look at when I look at the bond market with trading the equities? The bond market, it used to be a little bit, used to have some kind of correlation, were whether they were inverse or they correlated with. At least we could maybe get some opportunity there at some point during the early morning. Lately, I'm not watching them as much. I'm just kind of keeping them there. I think at some point maybe they'll come back and give us some kind of help with the equities. The main reason, basically, I have the bond market up there is because that's where I started trading, and on the bond pit when I started in this business. So kind of have a little love for them, care about them. I always think that the bond market is going to, at the end of the day, tell you where we're actually going. It's been all over the place lately, and the equities have kind of ignored them. So we'll ignore them too until they get back and play a little bit and become more important. That's a good question. I keep reading algorithms are taking over the market, and I think there's room for individual traders. I've talked about this before. I'm thinking that the reason that you can make it as an individual trader versus the algorithm is picking your spots, not getting caught up in those moves like the crazy move on Friday afternoon that the market had. If we can stay away from catching those crazy moves like on Friday afternoon again, but there's a reason that we don't trade on Friday afternoons, or actually most afternoons, is because those algorithms do take over in the afternoon with a lot less volatility in the market. The volume is a lot less apparent than they are in the morning hours. There's a lot less traders trading, and so those algorithms can kind of take over the market and kind of move the market one way or the other, especially if we all jump on it the same way. And so I think there are opportunities for us, and again, I wouldn't be here if I didn't think so. That picking your spot, and that's why when I said earlier, we have to wait for opportunities is very important. Like we did finally get down to that 10 area, and then we had a nice rotation off of it. And as you can see, that was the low of the day. We've had basically the high of the day and the low of the day kind of triggered up with our levels. If you just traded those two areas, you did okay. And so if you can pick your spots and stay out of the middle, like I call the no trade zone area. I know it's kind of hard for traders kind of not to do anything when the markets are, doing what they're doing, but really they're just bouncing around, going nowhere. Consequently, you have to also do nothing. Otherwise, you're going to get, going to get caught up in these inter-market moves for no reason. I mean, I don't know why they went up here to 22 or 24 and then rotated back here down to, 19. And could you have guessed it was going to do that? I guess you could guess, but if you guess too many times, you're going to, one, overtrade, and two, not guess right too many times, then you'll get yourself in a little bit of trouble. So the best thing to do is not to guess and be patient. Use the methodology that works for you, that you're comfortable using, and then wait for those opportunities to present themselves. I think that is the best way that we can manage those algos. The algorithms also are there to give us those moves up to those levels, right? I mean, you need those algorithms sometimes to give you those moves to levels that we have, and you're just kind of waiting for it to get triggered. So sometimes you also need those algorithms in the market so you can have those opportunities get triggered for you, especially if you are sitting there and you're kind of waiting for a level to get triggered. And I think for the same reason those algorithms kind of move the market, they also have to respect the support and resistance areas that the market creates. And that's why we get those opportunities as well. And we have those ebbs and flows to try to take advantage of. So make a long answer to your question in regards to algorithms taking over the market and individuals trader make it. I think there are, but it really depends on the discipline that each individual trader has, and that's very important to be able to have discipline and wait for opportunities to get triggered, and also obviously the discipline to make sure you keep your stops in place so that when you are wrong, you're not going to get run over by any trade that we put on. All right, there, Don, you got it. All right, so nice rotation there against our support level down at 10, the 10 area. And like I said, sometimes, we get lucky to the point of being able to, you got the high and the low kind of figured out here. And obviously, if I knew we were going to get the high and the low in the course of an hour, I would have told you, and we could all gone home, right? But I didn't know. So, and if you knew and you didn't tell me, I'm not good. But that's okay. We're not here to try to figure out highs and lows. We're just here to trade. The crystal ball is getting shined up. Yeah, a little fog in it. There's always fog in it when I start trading. I'll be right back here. Give me a second.
I'm not sure if that's what it's about, but it's only just let you know I'm working with,
All right. All right. Sorry about that. I had to take a quick phone call. Let's see. That I remember saying that price back to the level second time around. We don't want to fade the level again. Is that right? Correct. I mean, yes. There are times though when you can go and retest when they retest that level that you can maybe uh, take that opportunity and play it again. There are certain situations. If you're more risk averse, you're not going to take the level at all. Like I said earlier, even when I got filled on 25 area and it went back up again, it was a little riskier. If you're going to do anything, you were going to adjust it to the upper level, which was the 27. But yeah, once we get up there, there are certain situations though where, um, if the setup is correct, that you want to go and retake the test of a high or a low. Okay, so yes, it's a lot more riskier, that's for sure. And so that's if you're more risk averse, that's what you're going to do. So that is correct. So upside now we're looking at the 34 area. Yeah, well, it was a tough loss for the U.S. soccer, the women's soccer team yesterday. Unfortunately, that's why you play the game, right? They did dominate them, but at the end of the day, sometimes those games happen where you're like, you're the better team, except they kept hanging around, and all of a sudden, like you lose a game that you should have won, and you feel kind of silly. Happens. Been there, done that. You know, there's really uh, there's no way to explain it. That's for sure. All right. Let's get up to that 26-7 area. Rotate it off. We got up to 29 there this time, and then came off. So obviously, again, you didn't know it was going to go to 29 and not 34, and you didn't know it was going to stop there. So obviously, we're not. You have to just it's like I said earlier. It's right here in this like no trade zone area, and you got to be patient. A little support right now would be around the 19 area. No, we don't trade the Nasdaq. Just kind of focus, like I said, more on the S&Ps here, simply because again, it's one of those things where you don't want to overtrade and get yourselves in trouble. We have a methodology here, and it works here. I probably could take that same kind of concepts and use them in other markets as well, but again, I'm just going to be focused on S&Ps here instead of trying to wear myself a little bit too thin. Again, I don't want to overtrade. It kind of fits in with what we're trying to do. All right, we're going to just kind of hang in here, kind of a little flagging opportunity. Looks like maybe wants to rotate back up. We'll support right around 20. Otherwise, we're looking at the 34 next. Again, if anybody has any questions, feel free to ask in the chat. There are no numbers coming out this morning. Patience is important here. From right here, I would say not. It seems to be flagging a little bit. So you would be taking the top end of that flag. Again, it could finally bust through, right? I don't know if it will or won't. But if you're kind of looking for a little area to buy, probably looking at the 24, 23 area instead. Maybe you should have been doing it the last time. You can see where it's kind of flagging, those support there around 23 and intermediate support. If you were looking to buy it, right here could break through. Maybe if it does go above 30, maybe we have a little buying opportunity there above 30 to go to the 34. But if you're more risk averse, you're looking more at 25 to 23 area. We're looking, we kind of focus on the morning hours, so we're looking right around first hour and a half, 2 hours of trade. So about 10 o'clock, 10:30 Chicago time. I think we get a good bang for our money those times. So as you can see here, they definitely slowed down a lot over the past 20 minutes. So again, we can make a little bit of money in the morning, be good with it, and then look for a next opportunity. There's always tomorrow. You just never know when there's going to be some volatility that's going to be injected into the market. All right, well, we got right up to 30 there, didn't get above it, coming back up, back down.
What's up, buddy?
Again, if you're looking to buy, if you want to buy, you're looking at 23, 25. Again, whatever you do, you're always going to keep your stop in place. So keep that in mind as we come down here to this 25 area. Now we're just kind of coming back down here, a little support down in here. If you were looking to buy, get their blue band coming in there around 21. And we got support here at 25, 23. So you can see there's a few areas of support here. And anything below 18, you want to be out of any longs. All right, market coming down here to this little area here. If you are looking maybe to get long, if that's what you wanted to do. Our blue band's coming in there at 21. All right, we're just kind of hanging here, this area. Okay, that's a good question. So the question is, given the Nasdaq and the ES or S&Ps are tightly correlated. Tightly is not exactly the right word I would use, but okay. I don't believe they're tightly correlated. That would be one reason I don't feel to need to watch them. A lot of people are closely watching the Nasdaq price action, and then when they trade the ES, what is your opinion? Why do you not feel the need to watch the Nasdaq and trade the ES? Because mainly because I don't feel they're as tightly correlated as you might think they are. Obviously, one is very heavy on the IT side, and the ES is a little bit more broad, so a little bit different there. So yeah, the Nasdaq is definitely heavy on the tech side, and sometimes the tech side dominates more, moves more. If I'm not mistaken, I think the Nasdaq is up much more than the S&Ps this year. But on an intraday basis, I'd rather just kind of focus in the work that we do versus kind of leaning on something else. If I lean on anything, I would probably tend to want to lean on on looking at the bonds to give us some kind of maybe inverse trade, direct correlation, or something like that when they were doing a better job of doing that. But yeah, so and then sometimes what happens is that if you're looking for the Nasdaq to help you with the S&Ps or so on and so forth, and you're missing out on what you should be doing in the S&Ps because you're looking at the Nasdaq to maybe lead. I don't know which is leading. Is the Nasdaq leading? Is the S&Ps leading? Who knows? So kind of just focusing on what you're looking at here in the market and kind of go with that. So like we said here, if you wanted to buy it down there, that was a place to buy it there at 23, 24, 25 area. And then we did pop all the way back up here at 27. So we were looking for a little bit of a scalp there. Maybe you had a little bit of a scalp there against that little buying opportunity that we talked about instead of jumping up on top of that range. Yeah, well, like I said, we kind of keep it very simple here. It says it's amazing that you real professionals, been first time we've been called a real professional that way. Kind of nice. Only watch so little information when you are trading. Most of the retail customers are watching loads of information on so many screens, and that's why I keep saying that. Uh, you know, you have to. I don't know how those people trade when looking at 6 different screens in front of them. Kind of mind-boggling to me, honestly. But thanks for a compliment. I'm a real professional. All right, we're coming down here to our blue band now. Again, we were scalping the market. So if you did buy the 23 to 25 area, which it went down to 24, you got a nice rotation back up to 27. So maybe you're scalping that for a couple points. Now we come back down here to our blue band area. Again, we said anything below 18 out of any longs. And if you are jumping in here against this 21 area, trying to get a little bit of rotation off of it. Nice little hop here. Got down to 21, got back up here to 23. And see if it can give us the 23 here. So if you did jump in there, you got a nice little rotation here, back up here, and giving us our 23 here. So nice little rotation there against our 21, which is our blue band. Again, we keep it simple, keep it straightforward. You're scalping, so you could have scalped the 23, 24 area, 23 to 25 area, went back up to 27, came back down here to our blue band. You scalped that, got out here at 23, and now you're flat. And this is how you take advantage of ebbs and flows of the market. These are price action plays that I'm talking about. That somebody asked me where you wanted to buy it, so I kind of suggested a couple ideas. And if you did okay with them. Okay. So nice little quick scalps here. Again, all you're trying to do is take advantage of ebbs and flows. We're not trying to hit home runs. You're not watching it. Can it go back up to 30? Sure. Do I know it's going to go back up to 30? No. Do I know it's going to go back down to 10? No. I don't know. All I'm trying to do is take advantage of ebbs and flows of the market. And, if you wanted to stay long, then you could try to do that, but keep your stop in place either way.
So,
yes, sir.
I got a question for you, and it's been asked of me, and I don't know if my definition is sufficient enough. What is the definition of price action?
Well, I mean, there's many different ways to look at it. Obviously, we look at price action from a technical point of view, where you're looking at the little scalping opportunities that we get that the market creates using the bars that we have right in front of us. Another way of looking at it is looking at the volume that's actually traded at each price and seeing what kind of is what orders are coming in the market. Are they selling it more? Are they buying it more by looking at the volume that's being traded at each price? It's kind of harder to look at that. You used to be able to look at that when I was on the floor trading, when I would see big volumes being traded at prices, because the orders were in front of me when I was standing in the pit. I could see the orders coming in and getting filled, and you could see if there was more selling or not, or buying. It's a lot harder here on the screen because you can see the orders being traded, but there's a lot of stuff that's going on that you don't even notice because it's going so fast. Those algorithms are trading so quickly that you miss some of the trades that are going on. So that's another way of looking at price action. But for what we're trying to do, and what the different and to make it a little bit more fair for us, because we don't see the stuff that's going on behind the scenes in these trades that are happening with these algorithms, because they're going on, so they're happening so fast. Is looking at the screen and finding those price action plays that the market can create for us using the technical analysis that we do. That is what I call the price action when we are trading live, and we are trading. We're letting the different support and resistance areas that the market creates give us those price action plays that we are looking for. Now, you could use a 1 minute chart, a 3 minute chart. Obviously, those are going to create different opportunities for you based on the technical analysis work. Do they always work? No, but then that's why you keep your stops in place. But again, all the stuff that we talk about there, Don, with the different support and resistance areas that we see that the market creates, are the price action trades that we're looking for. Besides the levels that we give out, the levels that we give out are long term. They're based on the chart work that we do, and those are support and resistance areas that we feel are stronger. The price action plays are not as strong levels. They're just trying to take advantage of ebbs and flows that the market can create using the charts, that using the different bars that the market creates intraday. So those intraday bars that the market creates gives us those price action opportunities versus the longer term charts that we use to give us our levels that we give out every morning. Does that help?
Yeah, I actually went back and looked it up, and basically all they said was it is the action of price over time.
Right. So the time factor is the key.
Yeah.
Okay. So time factor in regards to the charts at the levels that we go out over the long term are one aspect of price action, and the time, the intraday moves that the market creates, that we look at price action plays intraday, give us more opportunities to trade versus those levels are the ones that we talk about when we talk about price action. So that's true. It's a matter of time. You could use, like I said, you could use a 1 minute or a 3 minute chart to give you different opportunities of price action. Okay. So it's the key phrase is time in regards to price actions.
Back in my younger days, I looked up the definition of level flight, and it was a series of climbs, turns, and glides. And I'm going, that pretty well fits this.
Yeah, right. That's true. All right. So again, I did say, and this is important to kind of pick up, that anything below 18, you want to be out of any long. So if you were looking to get long, I gave you an exit strategy. 18 would be your out. So sometimes you could take what I say and go backwards. If I tell you anything below 18, you don't want to be long anymore. So that kind of gives you an idea. Maybe you can find a place to buy it to give you a 2-point stop or something like that, and you could buy it against the area that I say you don't want to be long anymore. That's one way of looking at it. Another way of looking at what I say is by saying, okay, well, maybe if we get below 18, we could trade lower. And that's also true as well. So again, it all depends on what you want to do as a trader.
Well, I'm done. I'm out of here, and I will see you tomorrow.
All right. You take care there, Don. Thanks again. Volume profile. Well, we do look at volume in regards to the. This is a playoff of market profile, and market profile originally used to look at time as a factor. In regards to busting through certain areas, because the markets used to trade a lot tighter, a lot thinner, and created time factors. Once we broke through a certain time area or a certain area in time, that the market would, follow through one way or the other. Um, Over time, because of markets expansion into electronic trading, the concept of market profile turned from time to volume. All right. So the market creates value areas, which are value areas based on volume that's traded in an area. It could be a 10-point range, or it could be a 20-point range, but that range becomes that aspect of market profile that you're looking at to bust through a certain area. So I do look at volume. I have my charts there. Sometimes it's easier to spot those levels, the breakout levels on volume. As the market goes back and forth in a range, like it has been right here, it becomes harder. So you have to look at basically the top end of the volume area, which would be about the 28, 27, 28 area, and then the bottom end there, which would be around the 10 area. And you got basically kind of tell you that we have to bust above those levels right now, because over the last hour or an hour and a half, the volume that's basically amassed once the market has opened up has been between the 27 and the 10. And that's, if you expand it and if you look at the price, the volume during those areas, and then you will look at that's where most of the volume has been created. So sometimes it's narrower, the gaps are narrower, and you can find a breakout area, especially if you're trading overnight. Those areas do create those value areas based on volume are created differently than they do once the market opens up and starts trading at 8:30. So definitely there's different ways of looking at it, but so again, do look at the value volume, um, and obviously when you're looking at volume, that's also going to be one segment as to volatility, and also why we also trade more in the morning hours than we do the rest of the day, because the volume definitely decreases as the day goes on, the volume traded. So it's one thing that you have to consider when you're trading, and also where your stops are going to be. When the volume gets picked up and there's a lot of volatility based on volume, we have to expand our stops a little bit to be able to um, uh, take that extra volatility into consideration, because you're going to get more volume being traded. And again, it's also very difficult to watch the price action if you're just looking at the screen when there's no 100 lots or anything like that in the lather ticket or the dome, because they're just trading so quickly that you can't even see what's happening. But anyway, yeah. So another long-winded answer to your question. You do look at price, you do look at the volume, but it's different context sometimes. All right, we're just kind of now hanging here on these lows. Got to get above the 25 for us to rally a little bit. Again, we're coming down here to this 19 area, so we might get a little bit of a rotation to the downside. The push would be down to the 13 area initially, and maybe go retest the 10. All right, again, talked about a little, do not want to be long below 19, but here could also be a reason maybe to sell the a little bit of selling opportunity. And we're getting a nice little quick rotation here below it. Notice the volume often comes in at the exact certain time in the afternoon. The price would make a huge move then. What do you think? Well, I don't know. I don't really know what the exact time is, and then I guess it also depends on what's going on in the market at any given time. Hang on just a minute. Let's get I gotta answer this call. All right. Yeah. So again, I hope I answered your question. I don't know if there are certain times in late afternoon. What happens is that the bond market closes at around 2 o'clock Chicago time, and then the S&P is still open for an hour. And sometimes you get these exaggerated moves after the bond market closes. Don't know why. It just seems like they kind of sometimes wait for the bond market to close before they get left. This is what happened on Friday. I don't know if that happens all the time. I'm not going to say that it happens every single time, every day, but never know. I just, again, I don't take. I try not to. I try not to. Uh, say that something's going to happen on any specific time, moment, day. Instead, I just trade the market when it's given to me, for whatever opportunity is given to me. So, I mean, we had a little bit of a sale here below the 19. It got down to 16 and change. So maybe you were able to scalp it there, and then it comes right back up. So, there's all you're trying to do is take advantage of ebbs and flows. That's all. All right. Again, a little range bound here, a little resistance around our band there. And coming back down here, seems like the market's a little bit under a little bit of pressure for the time being. Obviously, market has to get above the 25 area, I think, to get a little bit more bullish. And now we're rotating back down here. Looking at the little support there at the 13 area. Otherwise, maybe go retest the 10. Or if you're more risk averse, you're looking at the even area in the downside. Again, if anybody has any questions, feel free to ask in the chat. We're coming here to the end of our morning session. So again, we focus more on the morning session to give us our opportunities. We feel the dynamics trade better in the morning than they do in the afternoon. And again, the support, like I said, around the 13 area, got down to 13 and a quarter there. Again, if you're more risk averse, you're looking down at the even area.